All right. Okay. Are y'all back? Yes. I just opened my WhatsApp and I saw about 20, 30 messages from different people that they couldn't join. Didn't open any of that yet. Okay. If you're back, can you just say something on the chat box so I can at least count the number of messages and that I know that you're actually there? Nice. Different thing. Sleepy, no? After eating. I also soon eat. I have a tube to make at night also. Guys, recordings of this I will not be uploading on Google Classroom, guys, because the moment I upload, that's another week of headache to me because 100 people keep on asking access to different stuff, right? So on my end, what I'll do is I'll check with the YouTube guy and I'll see what they can do. Okay. I'll see if I can maybe upload a Google Drive link and I'll send it on the group, maybe not on a Google Classroom. Will I do the free passport class for 2022 batch? I don't know. I'm still thinking because that's it's a huge word and it's around, I don't know. So far, we would have done around, I don't know, 20 classes and there is more to do. It's at least around 40 classes that I need to do. That's around 10 months of classes. Not an easy thing to actually get done with all the work that I have around. So I'm not sure. I'll check and I'll let you know. Yes, previous recordings may be missing because it's there on YouTube. Okay. I'll look into sending the drive. I'll see. Okay. Right. I'm guessing most of them are back. We'll start with 2014. Now, apparently 2014 will be a bit of an easy paper, right? Compared to 2013. 2013 was one of the hardest papers. Okay, so we'll go with 2014 and we start with this. The correct statement regarding money supply and income is that flow concepts and stock concepts. Okay, first of all, what is a flow concept? What is a stock concept? What is a flow and stock concept? Anyone? Flow concepts, not a very important area. What is a flow, guys? A flow concept is anything, right, in economics, which you measure for a point of time, right? So measure, sorry, not a point of time, measured for a period of time. Okay. Now, for example, we can say GDP. We say GDP for the year 2019. So for that period, this was the GDP. Now, if you look at stock concepts, right? Stock concepts are measured, right, at a point of time. At a point of time. So I can say one specific point. So we can say exactly at this point, right? So exactly at, let's say, today's date, that is the 7th of August, 2021, the amount of this is this much. Now, can I say as at 21st August, sorry, as at 8th August, the GDP is 5 billion? I can't say that, right? GDP is measured for a year. So measured at a point of time. Now, for example, the capital stock. Remember, we say capital of a country. So you can say exactly at this point, we have this much amount of capital. Then let's say investment, right? So you can say, okay, exactly at this, okay, no, investment is more of a flow concept, that's measured for a period. But things like this, like things like capital, the amount of labor, okay, so we'll say the labor force, right? So you can say, right, you can say exactly at this point, this is the amount of people that we have in the country. Now, if you look at flow concepts, it's measured for a point of time. Now, you can't say, no, now, if you take GDP, if you take, let's say, even income, guys, income is a flow. I want to put this here, right? Income is a flow concept, right? Now, when you ask someone's income, you ask him, what is your monthly income, right? Do you ask the person, what is your income as of today? No, that could be wealth. Don't confuse income with wealth. Now, wealth could be a stock concept. You can say, no, wealth means how much of money I have in my bank, what is that property I have, different assets I have. So I can say my wealth as at 7th August is, let's say, 100,000. But I can't say my income as at 7th August, 8:55 p.m. is 100,000. No. Income I can say for a month. So a flow concept is what you measure for a period of time. It can be for a day, month, year, anything. But for a period. A stock concept is what you measure at one given point. At this point, this is the sum. So even money supply, guys, is a stock concept, right? So you can say the money supply of Sri Lanka as at 7th August is, let's say, 2 billion, can be said. But you can't say the income of Sri Lanka as at 7th August is this. No. Right? So that is the difference between a flow concept and a stock concept. Again, a flow concept is measured for a period of time. A stock concept is measured exactly at that same time. Okay, so which one is the answer? 1, 2, 3, 4, 5. Okay, the answer. What do we have? Money, income is a flow. So it should be this 5. Right? Both are not flows, guys. Income is a flow. Money supply is a stock. Okay. So we go with answer number 5. Then the next one, question 27. Okay, an easy one. The demand for money of a country is determined by interest rate and high-powered money, value of money multiplier, interest rate and unemployment, real income and interest rate, amount of high-powered money and value of money multiplier. What are the main determinants of demand for money, guys? Transaction motive, precautionary motive, speculative motive. What are the determinants? It depended on what? Income and interest rate, right? Transaction and precautionary depended on income. But speculative motive depend on interest rate. So what are the main determinants? That is, we can call this real income and interest rate. A very basic question. In addition to that, you have price levels, future expectations, people's wealth, right? Different others. This is 26. You want to get a screenshot. Okay. Okay. 27 is a very easy question. It's answer number 4. So I'm not going to explain in detail. 28. Okay, again, a very easy question. A decline in price level has no impact on the value of money, increases the value of money, has no impact of the value of money in the long run, has no impact on the value of money in the short run, reduces the value of money. A decline in the price level. If prices go down, what happens, guys? What happens to the value of money? It increases the value of money, no? Because it doesn't reduce the value of money. Now, let's say I have 1,000. Let's say I have 1,000 rupees, right? 1,000 rupees, right? Now the prices of value went down, right? Prices went down. So now with the 1,000, I can buy more goods, right? So if the prices go down, that's why I have 1,000, right? Prices reduce. So that means I can now buy more goods with that. So my 1,000 is now more worth, right? It's worth more. Got it? So the value increases. Now, if the prices increase, now that is why we say, with inflation, the value of money falls. So when prices keep on increasing in inflation, then the value of money will fall. But when the price has fallen, it is the opposite, right? The value of money will increase. Answer number 2. Guys, any of these answers, in case your past paper book is giving you a different answer, let me know, right? I have not gone through those. Just in case I might miss a few points here and there. I'm hoping you all have your past paper book. No? In case the past paper book gives you a different answer, let me know so that I can see if I have made a mistake. Okay. So 28 is answer number 2, a very direct question. Then we'll go into, see now, can you see 2014 how easy the questions are? Okay. M2B, money supply of Sri Lanka, consists of what? High-powered money plus foreign currency deposits, demand deposits plus foreign currency deposits, fixed deposits plus foreign currency deposits, narrow money supply plus time and savings deposits, broad money supply plus foreign currency deposits. Okay, high-powered money plus foreign currency deposits, there is nothing like that. There is no money supply definition of that. Demand deposits plus foreign currency deposits, again, is a little incomplete, right? You don't have a proper thing there. Fixed deposits plus foreign currency deposits, again, nothing like that. Okay. Narrow money supply plus time and savings deposits. What is this? Narrow money supply plus time and savings deposits. What is this? Is it M2B or is it something else? That's M2, guys. Narrow money supply, that is currency held by public and demand deposits, plus the time and savings deposits, you get M2. This is broad money supply, right? So M2, I'm hoping you all know names now, right? This is broad money supply. So that is that. So then what is M2B? It's the fifth one, right? It's broad money supply, M2 plus foreign currency deposit account. That is NRFC, non-resident foreign currency, and resident foreign currency. So those are foreign currency deposit accounts. So broad money supply is M2, that has currency held by public, right? So if I am to expand this, so this one has currency held by public, demand deposits, and time and savings deposits also. So that is broad money supply. So that plus your NRFC and resident foreign currency banking units, right? You get M2. So again, a very, very direct question. We go with answer number 5 for question 29. Then, okay, next one. Okay, question 30. Macroeconomic stability is well reflected by. Guys, remember, macroeconomic stability is a combination of internal stability, right, and external stability. So can you tell me, if you want to check if you have internal stability, what do you look at? Internal stability. What do we look at? Exactly, guys. We look at the rate of inflation, right? We look at the price levels, right? So if you have stable inflation, we say that you have internal stability, right? So in other words, inflation is called price levels. You can also look at employment, unemployment also, but the main point is inflation. Based on inflation, the others also can be said. And then external stability. How do you define external stability? It's your foreign exchange and your BOP. Which one is more dominant from the two? It's your exchange rate. Yes, BOP. Now, for this, you can even put employment, but the main factor is inflation. External stability, yes, BOP is also there, but the main factor is exchange rates, right? So if your exchange rates are stable, that means your BOP is also kind of okay. Okay. So exchange rate is the main one. So external stability is measured using your exchange rate. Internal stability is measured using your inflation rate or your price levels. So then what do we have as an answer? Macroeconomic stability is well defined by this one, right? Price level and foreign exchange rate. In case the textbook is saying a different answer, please let me know. Price level and employment, both are internal, no? Foreign exchange and employment. So rather than employment, inflation is a better measure, right? So price level is a better measure. That's why I think we'll go with 1. Balance of payment and foreign exchange, both are external. Inflation and unemployment, again, both are internal measures. Okay. So 30, we go with answer number 1. And then, okay, 31. A macroeconomic objective expected to be achieved by reducing the rate of interest. So when you reduce the rate of interest, what is your expectation? Now, when the central bank reduces interest rate, what do they want to do, guys? What are they trying to do? Reduce interest rate. What is their what? Objective. Yes, increase money supply, and then when you reduce interest rate, I come to answer that, right? So it's to, when you reduce interest rate, right, what are they trying to achieve? They want to increase investment, right? They want investment to increase. So why? When you reduce interest rate, people borrow, right? Now these firms, they can borrow. Now it's very cheaper to borrow, right? So more loans, yes, exactly. So when interest rate reduces, more loans, that means investment starts increasing. People start to borrow, right? So investments increase, and also what else? Consumption also increases, guys, right? So that is how consumption increases. So as a so they finally want to achieve economic growth. Yes, agreed, right? So their direct impact is by reducing the interest rate. They feel now it's more cheaper to borrow loans. As a result, what will happen? Firms will start borrowing, they will start spending. So investments increase. And now even consumption increase. Now, if you're buying any, let's say, consumer durables, if you're buying, let's say, goods on installments, right? Now it's more cheaper. No, interest rate is low now. So if you're buying on installment, more cheaper. So you buy a TV, you buy a fridge, you buy a, I don't know, washing machine, you buy everything. So consumption also starts to increase. So that is what they're trying to ideally look at. Okay. So what do you think an answer is? Expected to achieve by reducing the rate of interest, decrease in consumption, not decrease in consumption. If you reduce the interest rate, consumption increases. So I'll cut off that answer there itself. Increase in production due to increase in investment aggregate demand looks right. Okay, we'll hold on. Increase in profits due to an increase in consumption. Increase in profits is questionable. Increase in government tax revenue due to increase in savings and consumption. No. Emergence of new investment due to increase in share prices and business profits. No. Okay, which one do you think? 2 or 3? Which one is a better answer? It's 2 is a better answer, right? Now, you can't guarantee, right? By reducing interest rate, you can't guarantee that the profits will increase. This, it doesn't make sense, right? Right? The profits increase, that you can't guarantee. You know, how can you say that the profits of the firms are increased, right? So increase in profits of the firms due to increase in consumption, no. But you can say this, right? Due to an increase in investment, when investment starts to increase, right? Aggregate demand increases, right? When investment, I'm hoping you all know, investment is a component of aggregate demand, right? So when investment increases, aggregate demand increases. When the aggregate demand increases or the aggregate expenditure increases, what happens to output? Output also increases, the production increases. So we go with answer number 2 as the correct answer, right? 2 is the correct one, not 3, because profits you can't really conclude. You can't say that the profits are going to increase. But this you can, right? When investment increase, aggregate demand increases. To cater to that aggregate demand, production will also increase. So production will increase because of an increase in investment and aggregate demand. Is that fine? Yes. 31 is 2. Someone wanted the answer for 30. 30, the answer is 1. Okay. 30 is done. 31 is done. Direct answers. Okay, again, a very simple question. Examples for expansionary fiscal and monetary policy are? What do you think answers are? Expansionary fiscal and monetary policy. What do we have? 1, 2, 3, 4, 5. Okay, increase in SRR is not expansionary, it's contraction. You guys, by now, I'm hoping you all know this, right? I'm not going in detail. If you sell government securities, again, it's contractionary. So, no. Increasing SRR, again, contractionary. Purchase government securities, yes, it's expansionary. And reducing taxes, yes, expansionary. That is be 4. Most of them gave me 5. Increase interest rate and increase government purchase. If you increase interest rate, it's a contraction. So you go with answer number 4. Okay, in case you're not sure. Okay, right. I'll just talk about monetary policy, right? Because that's the unit, right? Expansionary monetary policy. Okay, expansionary monetary policy is where you want to expand the money supply. So how can you expand the money supply? SRR has to increase or reduce to expand money supply. SRR has to reduce, right? Banks have to start reducing the SRR. Okay, then should the central bank purchase these things or purchase securities or sell securities? CBSL, they have to purchase securities. They have to pump money in to expand the economy. They purchase. The central bank should purchase securities. In addition to that, you can talk about, okay, the bank rate. What should happen to the bank rate? The bank rate has to reduce, has to decrease. Because any interest rate has to reduce, right? Okay, the standing deposit facility rate or the standing lending facility rate has to again decrease, guys, right? So now this is what they're doing. Now this is what they're doing currently. Okay, currently the government, they want the economy to come back, right? So they want to make the economy boom. Now that is why you have all the interest rates are very low. Standing deposits, standing lending, SRR, right? Everything is very low in the economy. And then, so in general, what they should do, they should reduce interest rates. That's a general thing. Right? So when I say interest rate, standing deposits, standing lending, bank rate, everything, right? So reduce interest rates. They should purchase securities. What else can they do? Anything else? I think that's basically it, right? That's basically about the expansionary monetary. So expansionary monetary policy, the basics is what? Why are you having an expansionary monetary policy? Is to increase money supply. So how can you increase money supply? Maybe you reduce SRR, maybe you purchase securities, maybe you decrease the bank rate, you decrease standing deposit, standing fast. How much is this rate now currently in Sri Lanka? At least fast track people, I think I would have told you all this. How much is the rate now current? Standing deposit, standing lending, anyone else? How much? It's 4.5 and 5.5, right? Currently it's okay. What is 4.5 and what is 5.5? Deposit or the lending is 4.5. Which one is lower? As the deposit is lower, right? Standing deposit facility rate is 4.5 and the standing lending facility rate is 5.5. How much is the SRR currently? I think I gave a new number recently in the fast track code. How much is the SRR? Percentage? 2%? I can't remember exactly. That's the number I gave you, all right? Recent number. Yes. Can someone check the note? I think that was the number I gave you. Now that changes, right? Changes the time to time. Currently, I think that is the level it is at. So why are they doing that? To expand the economy, right? To make sure they reduce SRR to 2%. They have reduced standing deposit, standing lending facility. When they reduce that, all the money market interest rates fall. I'm hoping you all know that interest rate corridor story and all of that also, right? So that story is that. So ideally, expansionary monetary and fiscal policy expansion, I'll not talk now. It's simply about reducing taxes, increasing government spending. You go with answer number 4 there. Okay. That is the answer. Yes, I'm just wondering, just a normal question to ask. Why do you think the crowd is higher today? Why do we have a higher crowd? I did not do anything special. I did not invite anyone else new. Why is the crowd higher today than the other? Because it's the 7th lesson. I was wondering why. Because I did not have any seminar. I did not ask anyone to come, and did you have anything? Okay, maybe because it's 3 months to go for A-levels, or maybe because it's okay. So few things I can think of. One is the time. Maybe Saturday nights more people are free. Maybe one is the start of the 7th unit. The one may be maybe a fast track break. Okay, over the exam is 3 months. I don't know. I was still thinking. Now I'm wondering now if this will be the next class, because if I am to get a bigger account, there is a process that I need to do. I don't have an account. This is the only account I have. So if I need to get a 300 participant account, I need to check with a friend and book it early and do all of that. And then I'm wondering, if I do that, what if people don't turn up? So I'll do it once, right? If that doesn't come, I'll stick back to my normal account. Okay. Fiscal policy, guys, we'll talk about in unit number 8. Fiscal policy is unit 8, right? Because it's a combination of unit 7 and unit 8 question. That's why I put it there. Okay, that's it with that paper. It will not cost money. No, if I'm to get usually a 300 participant account is very expensive. It's around 15,000 a month. But I have a friend who has one. I can check with her and see. If it's free, I can get it. If not, I am not going to pay 15,000 and get that done. If you all have an account that can have more than 100, then that's fine. Okay, that's 32. Okay, how many of y'all got how many right? There was 1, 2, 3, 4, 5, 6, 7. 7 MCQs. How much out of 7? But those were easy, guys. Not that hard. 6. Was there 7 or was there 6 MCQs? Did I count wrong? Okay, there were 6 MCQs. Okay, so 6 out of 6. I think that's good. Okay, we'll move on to 2015. Okay. Can't we have this every Saturday morning? Guys, I guess I'm repeating, guys. At the very beginning, I'm hoping you all were there. So only for this month, we will have a bit of double classes and stuff, because this month in my fast track program for the 2021 batch, I have given them a break. So they're nicely enjoying a break, I think, after a lot of work. So only for this month, the time would be I would have a few additional dates. I'll inform you all. I'll send you all a proper schedule beforehand itself, so that you all know the exact things and you all can plan out. Okay. From next month onwards, it will be our normal Saturday morning. Yeah. Okay. Not enjoying the break, but I am a little relieved. Now, if it was a fast track class, I would have been so much under pressure to finish something off in 3 hours. It's a very pressurizing class, the fast track class to do, is because in 3 hours you need to finish things off. Like I also go on. I don't have time to talk of anything else. Also, to go on and on and on. Not an easy thing to do. Also, as a it's the 2022 and the 2023 classes are very chilled out. I especially like my 2022 batch. I've not properly started the 2023 batch. My 2022 batch, they're very smart also. I like how smart they are. You have really good people, and it's easy to teach them also. Not much of a it's not much hectic. Not that I'm putting all down, but I personally enjoy teaching them a little bit more. It's a little bit not that hectic. Okay. Okay. So question number 30. Which of the following groups? Right. Now we are moving to 2015 now. Okay. So which of the following groups would actually benefit from an occurrence of unexpectedly high inflationary pressure or high inflationary price rise? So if inflation increases, if prices tend to increase, who will benefit, who will lose? Whom do you think benefits? When there is inflation, which parties benefit? Guys, the borrowers benefit, right? You know why the borrowers benefit? Now, let's say, for example, you gave me a loan of 1,000 rupees. Forget about interest and everything, right? You gave me a loan of 1,000. Okay. You told me, okay, sir, what? Pay me back in 1 year. So I also took the 1,000 rupees. I went and let's say 100,000. Okay. So let's say 100,000. You were planning to buy a laptop, but I asked you the loan. So you said, okay, Pauno, this is my sir. I'll give him 100,000. You gave me that loan. Now I bought the laptop. Right? Let's say I wanted to buy. I also want to buy a laptop. You gave me the loan. I bought the laptop. So 1 year later, right? So let's say I give you a little bit of interest also. Let's say I give you 5% interest. So 1 year later, I give you 105,000. But now, because of inflation, the laptop has increased even more. Right now, the laptop which was 100,000, let's say now it's 130,000. Right now, actually, laptop prices are very high these days. So I've realized, right? So as a result, what happens? You are the person who gave me the loan. You were the lender. Yes, you got 105,000 at the end. You got a small 5,000 extra profit. But because of inflation, now with that 105,000, you can't even buy the laptop which you could have bought 1 year ago. So the lenders are losing, guys. The borrowers, right? These people are gaining, right? So now look at me. I took the loan, right? I took the 100,000 from you. I bought the laptop. I paid back 105, right? So I was benefited. Yes, I paid 5,000 more, but if I had waited 1 year, if I had waited 1 year to collect and buy that laptop, I should have collected more than 105,000. So I'm actually benefited. So borrowers benefit. Who else benefit? Who else benefit? Okay. Yes, you can say traders benefit, right? People who sell stuff, buy and sell stuff, they can sell at a higher price. Investors, yeah. So traders, or I can call them variable income earners, right? Variable income earners. Yes, debtors come under borrowers, right? Who else? Okay, entrepreneurs. Okay, fine, but I'm not. You can't exactly say. Okay, okay. Short-term investors. Okay, fine. Short-term investors over long-term people. Compared to long-term people, yes, short-term people are this thing. Short-term investors. Right. Okay. So these people. Factoring companies. Okay, professional services. Okay, fine. Those kind of people do it. Then who are the people who lose out? Who are the losers of this, of inflation, because of inflation? All these, right? People who are there. So people who are earning, okay, so first of all, the lenders, right? The lenders, or you can call the creditors, whoever who gives loans, they are losing. Apart from that, the fixed income earners, right? So people who are earning pension, people who are earning a fixed salary, basically. Now these people, when the prices keep on increasing and increasing, they're still earning the same income, no? So fixed income earners, are losing. Then the because of inflation, okay, exporters are losing. Okay, fine. Exporters. You can call importers are benefiting actually because of inflation. Now they can buy. Now current prices are high, so importers you can say benefit not because of this, because okay, savers and okay, losers. Okay, people who save, they also lose. Yes, savers. Menu cost, shoe leather cost. That is, but impacts of inflation. That is not the benefits and the losers. If you want to know, I can tell you that's like disadvantages of inflation. Okay, so those kind of things are the ones. Okay, so then in this question, okay, long-term investors. Okay, fine. So guys, there are more than this, but I'm just saying in general. Okay, long-term investors, different people. So okay, which the following groups would actually benefit from occurrence of unexpectedly high inflation? Who would benefit here? All of a sudden inflation increases. Who benefits? 1, 2, 3, 4, 5. Retired workers, lenders, wage earners, elderly people who have saved money during their working years. Borrowers. So all of a sudden, if unexpectedly there is a high inflation, if I have borrowed money now, it's good for me, right? Now, now the best part is this, right? I was asking. Okay, so just a small random question. I asked the 2022 batch also. Let's see if you have some common sense. Okay, think of now what has happened, right? 1 year before, if you were there 1 year before, let's say you had around 5 million, where would you put that money in? You had 5 million last year, let's say by August. What would you have bought, or where would you put your money in? Okay, I have shares. What else? Land, Colombo Stock Exchange, bank. I'm looking at a different answer. Gold, unit trust, no, Bitcoin. Okay, I finally got one answer. It's on a vehicle, guys. You could have bought a vehicle, right? The vehicles that are going at 5 million last year are now earning around crypto. Yes, but there is definitely a risk there. It's a good place to learn. I was talking about crypto with the 2022 batch. They were very interested. I think it's definitely okay. Masks is also okay, fine. But I think in a long-term thing, it would have definitely been a vehicle, right? Because right now, if you look at vehicle prices are crazy, right? A normal, even from a Wagoner to a normal thing is going at around 5-6 million now, right? I saw a Toyota Premio going at a 20 million. Okay, cars which were around 5-6 million 1-2 years ago. So imagine the profit you could have made in case you bought a car last year. If you are buying it to sell it. So you could have bought it, you could have rode it the entire year also, and you could have sold it with a 2-3 million profit as well. So things there. Now, because of inflation, right? Now, if someone had borrowed, if someone had took a lease and bought a car last year, that fellow is actually gaining, right? He's someone who borrowed. He's a borrower. Yes, he might be paying an interest, but at the end of the day, he's getting something much more worth than that. Even though he's riding and he may be paying additional interest for the lease and all of it, he's actually benefiting. So borrowers are benefiting with unexpectedly high inflation. So this is not really inflation. This happened because of the car ban and the importing restrictions that came in. But yeah, is anyone here just into cryptocurrency, buying and selling any cryptocurrency? No? Anyone? Bitcoins? No? Okay, no. 30. Okay, question 30 is borrowers. I have tried. I do have a normal listing that I go on a day-to-day basis. I do think it's a good thing to be, but I'm still learning, and I'm still looking at different other things. Okay, then question 31. Okay, when an economy is at full employment, which of the following will most likely generate demand pull inflation? So demand pull inflation will happen if the aggregate demand increases. So which of this will increase the aggregate demand? So AD increases, right? There will be demand pull inflation. So my question here is, which of this will create that? In economies at full employment, the following will most likely generate demand pull inflation. A decrease in the budget deficit. Guys, if the budget deficit falls, right, that means government spending is falling, right? So G is falling. So if government spending falls, aggregate demand falls. right? A default, that is one. The second one, a decrease in net exports. Okay, if net exports falls, net exports is a direct component of aggregate demand, no? Yes, if net exports falls, AD falls. No? AD equals C plus I plus G plus NX. So a decrease in net exports falls. Aggregate demand has to increase for you to have demand pull inflation. If net exports falls, aggregate demand falls. There is not demand pull inflation, it goes the other way. A decrease in trade union power, that doesn't really affect on your aggregate demand, it affects aggregate supply. So I'll just leave that there. The fourth one, a decrease in real interest rate. Yes, right? So if real interest rate falls, then what happens? Remember I told you, if interest rate falls, what happens, guys? Interest rate falls. Rates fall, yes. Money supply increase. As a result, what happens, guys? Investment and consumption increase, right? I just taught you all that. Investment and consumption increase. So investment and consumption are components of what? Aggregate demand. So aggregate demand increases. Aggregate demand increases, and then what happens? Demand pull inflation. Fifth one, a decrease in money supply. Then no, aggregate demand falls. Then if money supply decreases. So this is one. This is the first one. This is the second one story. Third one, it affects aggregate supply, right? So they're asking you demand pull inflation. No? So trade union power is not going to affect demand pull inflation. Okay. The fourth one is this. The fifth one is this. Right. So which one is increasing your aggregate demand and creating demand pull inflation? Right. It's the fourth one. So in our case, it's this. Right. So what happens when aggregate demand increases? As I'm hoping you all know the normal diagram. Okay. So remember this demand pull inflation. You have aggregate demand. You have economy is at full employment. Right. So this is where you are at currently. So when aggregate demand increases, what happens? The price level starts to increase. So this axis is price level. Right? So that is what they're asking. So they're asking you which of the following is a reason for an increase in aggregate demand. The answer is the fourth one. Okay. So 31 is done. Questions are getting a little easier, no? Okay. Okay. Over a period of a year, a country's inflation rate was 12%. Okay. Over the same period, the growth of nominal gross national product, growth of nominal GNP was 14%. Which of the following correctly describes what happened during the 1 year period? Okay, guys, how do you get, what do you do here? How do you get, what is the difference between nominal GDP and real GDP? Nominal GNP or even GN. Okay, so real GNP is equal to nominal GNP minus inflation. So they are saying, okay, real GNP, I don't know, right? Nominal GNP, they are saying has increased by 14%, right? Inflation, they are saying is 12%. So real GNP has what? For example, real GNP. Nominal GNP increases by 14%, inflation increases by 12%, real GNP 2% what? It increases by 2%, right? It's a plus 2%. So that is what they say. So that is that. Okay, so then what is the answer? 1, 2, 3, 4, 5. It's a very simple question. Money supply decreases, money supply increases, real GNP increase, real GNP fell, velocity, real GNP increase. That's all that you have to do. Guys, don't get fooled by this 2% and go and say money supply increased by 2%. That's not the answer. It's your real GNP that increased by 2%. Okay. So this is the equation. Real GNP equals nominal GNP minus inflation. So nominal GNP increased by 14%. Inflation increased by 12%. So as a result, real GNP increased by 2%. So real GNP increase. It's not money supply which increased by 2%. It's your real GNP which increased by 2%. Okay. That's 32. Another easy one. Okay. Again, a very easy one. The concept of near money refers to what? Near money. Financial assets whose capital values are too unstable for them to be classified as money. Liquid assets that fulfill the medium of exchange function, but not the store of value function. Liquid assets that fulfill the store of value function, but not the medium of exchange function. Checks on demand deposits. Credit cards. Easy one, guys. Just the definition that they asked. What is the answer? Can I have an answer from everyone ideally? 1, 2, 3, 4, 5. Too lazy. Start typing. The answer there is a third one, guys. Right? Liquid assets that fulfill the function of a store of value. Guys, I am hoping you all know what near money is. So what are the examples of near money? What kind of examples do we have? So examples, savings accounts, right? Guys, near money, you don't have notes and coins. Savings accounts, you have fixed deposits, right? Then you have what? Maybe commercial. Yeah, fixed means time deposits, guys. So commercial bills, right? So commercial papers, treasury bills, right? So all of that is, yeah, you can even put bonds. That's fine, right? So all of this is what you call near money, right? You have promissory notes, different other stuff as well. So this is near money. Now these kind of things. Now, can you pay using this? Can you pay a expense using your fixed deposit account, right? So it doesn't facilitate the medium of exchange. It is simply there to store money and keep. So it acts as a store of value, but not as a medium of exchange. So savings, deposits, things like that. So that is the answer for 33. Okay, guys, one more thing. I'm just, I think I asked my past experience also. I'm just to let you all know that there is something. This is not something that I am doing. I could have asked this a little bit before. But there is a model paper book that is being printed by our university, by our Rotaract Club to raise funds for a project. It's a A-level commerce. I think I've told the story for, can't remember though, if I told you all or not. There is a model paper book currently being made and it will be released by the end of this month, right? The plan is to print 500 model paper books, that is English and single medium both. There will only be around 100 English medium books, around 400 single medium books, because single medium is where the market is a little bit bigger, right? We will open up orders by the, I'm not sure because my fast track, it will be sold, guys. I will, it's not a book that I am making. It's nothing connected to my classes or anything. I'm just telling you because I'm a part of the club, right? It will be sold at 600. There will be 6 model papers from the 3 subjects, 3 common commerce subjects, that is business studies, accounting, and economics. And I think there'll be 1 general English paper also, but not the other subject. There won't be ICT, there won't be anything else. It will just be the 3 subjects, that is accounting, business studies, econ, 6 papers, so 2 each, and answers. It will be a proper paper. It will not be any, because usually all the model papers that is there currently in the market is all with a lot of mistakes and different stuff. Maybe the English is wrong, different stuff. So we're putting out a book. I just want to check, will you all be interested in buying? I'm thinking if 100 is a lesser quantity, because in my fast track class also a lot of people said they were interested in buying. Will you all buy? Do you think we should print more than 100? Because it will be sold throughout the country. I'm checking. It will be sold at 600. That will be the price. That will not change. I'll see. I don't know. Okay, so this is what will happen. We will open orders. Okay, so I'm not sure because usually single medium we know we can sell it off, because if you look at the entire level English medium market, there is only a maximum of around 5,000, 6,000 students, right? So we're not very sure. We will see. And what we'll do is we will be opening pre-orders, right? So by the mid of August, you all can pre-order the book. So you all can pay and book. The book will be available by the end of August only, which you all can either collect it from someone or you all can get it couriered to your doorstep. So maybe if you are really into it, pre-order it before and keep, right? No, guys, it will not be a separate book only for econ. It will be econ BS accounts all together. So maybe if you're only doing econ also, then you can think if you really want to buy it or not. That's up to you. It will be 1 book, right? The ordering process is not yet there, guys. I'll let you all know on the Beyond the Classroom group. when we open orders by the mid of August. So I'm again repeating, our plan is only to print 100. If there are more than 100 orders, right, then we might print a bit more. Otherwise, we're going to stick to 100. So if you wait until the very end, you might lose out. I guarantee you it will be a good model paper book. So we are targeting and this thing. Yes, it can be delivered, but then if it is within Colombo, you will have to bear the cost price on delivery. So somewhere around 100, 150, you will have to bear it, or you can collect it from now. My fast track students, you all can get it with my fast track tute itself sent to you. So along with my fast track tute, that is what I was planning for my fast track students. Other people, yes, there will be a small little key. There will be 6 papers, guys. So 2 papers each, not 6 each. So total 6 papers. It will be a book of around, let's say, 150, 200 pages, right? That's the plan. I'm just letting you all inform. Price will be around 600. Yeah. Okay. Guys, this is not my book. I'm not printing it. Don't get me mistaken. I'm not promoting anything else. It's just a project that we are doing to raise some funds for another project. Okay. Right. 33. So once pre-orders are open, I'll let you all know. Okay. Right. So if you have friends also, you can just keep them informed, because maybe if we run out of things, then that's a problem. Okay. Question 34. The largest component of M4 aggregate in Sri Lanka at present is, what do you all think? Okay, so what will M4 have? It will have currency held by public, right? It will have this, right? Currency held by public. This will be there. Then there will be demand deposits. Demand deposits in commercial banks, right? Then there will be time and savings deposits. That's fixed deposits and savings deposits. Savings deposits in commercial banks. In addition to this, what will you have? You will have resident foreign currency banking units, that is RFC. You will also have non-resident foreign currency banking units. So in addition to this, you will also have, this is M4, what is the other one? You will have what? Time and savings deposits. Savings deposits in registered finance companies and specialized banks. So that's complete M4. So in the question they're asking, from these things, which one is the biggest component? That is what they're asking. The largest component from these is what? Is it currency held by public? Is it demand deposits? Is it time and savings deposits in commercial banks, or what? Please, the biggest component is this. It's the time and savings deposits in commercial banks. Now, even if you look at us, right? Now, I'm sure most of you all also have a small account somewhere. That's savings account, right? Almost everyone has a savings account. So it's the time and savings deposit that's the biggest component. So now in this, they have not directly told time and savings deposits. They have given a different name to this. What is that? What do you think the answer is? 1, 2, 3, or 4? Currency held by public, deposits held by public, demand deposits, quasi money held by public in loans and finance. That. Yeah, it's this guys. It's the 4th one. Okay, quasi money refers to time and savings deposits, right? In commercial bank. Again, an easy one, not that hard. Okay. That's done. Okay, finally, credit creation. Okay. Suppose that in a commercial banking system, all banks maintain 20% of deposits as a cash reserve. That's SRR. One bank receives a new cash deposit of 200 billion. If there is no subsequent change in currency in selling, that is, no one is depositing or withdrawing, what will be the maximum amount of loans that the banking system can grant as a result of the new deposit? We did a very simple, similar question of the monopoly bank question. So what is the maximum amount of loans that the banking system can grant? They're asking for maximum amount of banking system. So when they say banking system, what do? You use the deposit multiplier, right? So if you take the banking system's balance sheet, right? If you look at the balance sheet, how does it look like, right? So there is a 200 that is coming in. How much is SRR? Okay, how much is deposit multiplier? 1 divided by 0.2, that is 5 times. Hoping by now you all are expert there. So then if a deposit of 200 comes, it multiplies by 5 times, there will be total deposits of 1000 million. But is that what they're asking? No, they're asking you the total loans, not the deposits, right? So deposits, yes, is 1000. Agreed, right? But they're not asking you for deposits, they're asking you for loans. So how much of reserves will this have? Yes, the reserves will be the 200, right? The initial deposit becomes the reserves. Okay, the reserves is 200, and then how much of loans? The balance is the loans, right? So the loans is 800. So that's how you find that out. Okay. Again, a very easy question. Guys, these MCQs are not hard, right? Don't think too much. It's actually a very easy thing. If you focus, if you look at the past papers, you see that the same question only they ask in different way. So the answer here, the maximum amount of loans is a 800. Okay, done. That's 35. Then we'll get into 36. Okay, which the following would be expected as a result of an open market sale of government securities. Now it's the opposite of what happened last time. Last time they had an open market purchase. Now here they are open market sale. The government is selling securities. What happens? Increase in real GDP, increase in interest rate, increase in number of loans, increase in private investment, increase in money supply. Okay, so if I'm just to know the normal stuff. Okay, so if the central bank sells securities, right? Sells securities, who has to buy? The font is too small, right? If the central bank sells securities, commercial banks, right? Commercial banks have to buy. So what happens to the reserves of commercial banks? Reserves of commercial banks decrease. Now they have to buy, no? It decreases. So when the reserves decrease, the ability to give loans, decrease. Now they don't have much money to give loans. When they are not giving loans, money supply decreases. Remember I told you about the demand and supply thing? If money supply decreases, interest rate increase. Okay, so then look at that and let me know what an answer is. One, two, three, four, five. Okay, definitely not increase in money supply. It's a decrease in money supply. Increase in number of loans, no, it's a reduced number of loans. Increase in investment, no, because if you can go here, right? I'll add one more thing. If interest rate increases, what happens to investment? Investment and consumption. I'll add more stuff here. Investment and consumption falls. What happens to aggregate demand? Aggregate demand falls. What happens to output? Output, or you can even call it real GDP. So this connection you all need to be figuring out, right? So that at this level, I would expect that from you all. Any teacher would expect that from you all. The real GDP also falls. So you need to know how this all connects one by one. Why does when money supply decreases, why does interest rate falls? Okay, that is the normal demand and supply, right? But I told you all before as well. So you have demand, you have supply, right? So demand for money, supply of money. The cost of money is the interest rate. So if the supply of money increases, what happens? The interest rate falls. There's a lot of money now, right? So the cost of money has become cheaper. So interest rate falls. So that connection you all need to know. So from this connection only they usually test. Now it works the other way if the central bank buys. Now that's up to you all to figure that out, right? By now you all should be able to connect the dots, know how this goes, how that goes, right? All of that. So Okay. So which of the following is expected? Okay, an increase in real GNP again. No, it's a decrease. Increase in investment. No, it's a decrease. So you end up with this, right? So 36 answer number 2. Fine. Check. Is that too much? Yeah. Okay, so that's 36. Okay, done with 2015 as well. 1. Okay, 1, 2, 3, 4, 5. 5. Yeah, there's more, no? 6, 7. 7 MCQs, really? 30 to 36. Yeah, there's 7 MCQs. How much out of 7? 7 out of 7? No? Yes, no, too tired. Okay, you want to do 2016. We have 15 minutes more. My plan was to finish off by 10. Yeah, go with majority of answers. What do you want to have? 1, 2. I'll finish off by 10 though. 3, 4, 5, and 6. Want to do 2016? Shall we finish it off? Yeah. Well, so we can go a bit more faster. Anyway, because we are running out of time. Okay, right. So we'll do it a bit more faster. I'll finish off by 10. Don't worry. Okay, right. 2016 elements. According to the quantity theory of money, we studied this now. A 10% increase in nominal money supply will lead to what? So quantity theory of money is MVPT, right? So money supply has increased by 10%. What happens? So quantity theory of money, what do they say, guys? Quantity theory of money, what are the assumptions they make? They make a few assumptions. The assumption is the velocity of circulation and the amount of transactions are constant, right? So if money supply increases by 10%, what happens? Price level also increases by 10%. That is what the quantity theory of money is saying. Quantity theory of money is there to explain demand pull inflation, right? So they say there is a direct relationship between money supply and price level, given that velocity of circulation and amount of transactions are constant. So if money supply increases by 10%, what happens? Price levels also will increase by 10%. So it's a very direct answer. You go with answer number 4. Okay, that's the answer. Then is equation of exchange. The difference between equation of exchange and the quantity theory of money will come. There are second part questions there, right? So I'll explain that when we do a few part 2 questions. That's there in the past papers. Okay, not a big difference, no? I'll show you. Okay, question 28. Assume a country's national income is at full employment. Okay, guys, simple question, right? Which of the following circumstances is most likely to cause inflation? So which of these will cause demand pull inflation? You've kind of done this before now. When will you have demand pull inflation? When what of this happens? 1, 2, 3, 4, 5. His answer is number 1, right? A fall in interest rate. So if remember I told you, if interest rate decreases, what happens? Right? So interest rate decreases, right? They borrow more. So investment and consumption increases, right? Consumption increases, and as a result, aggregate demand increases. When aggregate demand increases, there is demand pull inflation, right? So that is that story. Now the other stuff. Now remember, guys, when the economy is at so it's this, right? It's the first one. A rise in labor productivity will increase aggregate supply. So if the aggregate supply increases, the price levels will actually fall. So not the second one, right? Appreciation of the exchange rate. If the exchange rate starts appreciating, then what happens? Your exports will fall, right? I'm hoping you all can connect to unit number 10 a bit, right? Exports fall, imports increase. So net exports is falling. Net exports falling means aggregate demand is falling. So aggregate demand falling, you will not have demand pull inflation. The price levels will fall. So not this again. A rise in marginal propensity imports, that means your imports are increasing again. Net exports falling, again, not inflation. An increase in rates of personal income tax. If personal income tax increases, consumption will fall, right? Disposable income falls, consumption falls. Consumption falling, aggregate demand will fall. As a result, the aggregate demand falling means there's no demand pull inflation. For demand pull inflation to happen, the aggregate demand has to increase. So in which of the following does the aggregate demand increase here? Only in the first one. Okay. I'm hoping that's clear, guys. If you have questions, please ask. Okay. Okay, the next one. Commercial banks can create money. How can they create money? It's a very basic question. Answers? 1, 2, 3, 4, 5. Converting reserves into securities, buying treasury bills, sending cash to the cash in hand to central bank, maintaining 100% reserve requirement, lending excess reserves to customers. How does this whole credit creation thing work? Commercial banks can create money when they give loans, right? It's their excess reserves that they give out as loans. So if commercial banks can create money by lending excess reserves to customers, if they give the excess reserves to customers, they can definitely create some credit, create money. So 29, answer number 5. Question 30. Okay. Suppose an individual withdraws 10,000. Okay, now this is opposite, right? Now earlier we usually talk about a person depositing money. Now here what is happening? An individual is withdrawing 10,000. Okay. If all else is constant, the bank has a SRR of 20%. This transaction will reduce money supply by 10,000, bank deposits by 10,000, money supply by 50,000, bank deposits by 50,000, bank deposits by 8,000. What is the answer? What do you think? Okay, first of all, right? So money supply is equal to currency held by public plus demand deposits. That you all know, right? I'll just show you this. Okay. Now, can you all first tell me, right? Listen carefully. Okay, I know you're all a bit tired, right? When a customer puts 10,000, right? Let's assume a situation where a customer deposits. So if a customer deposits 10,000, right? What happens? How much is our, okay, so he's depositing 10,000, right? How much is our multiplier, deposit multiplier in this example? 5 times, right? SRR 20%. I'm hoping by now you all know. So deposits will increase by 50,000, right? Now listen very carefully, right? So when a customer deposits 10,000, right? Deposits will increase by 50,000, right? So total, it will create credit. Deposits increase by 50,000. Does money supply also increase by 50,000? Is this correct? Currency held by public? Nothing. Yes or no? What is the case there? This is not the case. This is wrong. Guys, a person is depositing 10,000 means his currency held by public, right? The amount of cash he has is reducing. Okay. So this is a minus 10,000. The currency held by public is a minus 10,000. Money supply only increases by 40,000. You understand that? If a person deposits, now say I have cash with me. I'm going and depositing into a bank. So the amount of cash I have is reducing. So currency in circulation is reducing by 10,000. Then I put that 10,000, they create credit. Demand deposits increase by 50,000. But money supply has increased by how much? Has only increased by 40,000, right? So if a customer deposits, that's the story. So if I want to re-explain in simple context, think that a customer is going and depositing money. He's depositing money means from the currency he has, it's falling. So currency held by public, the CC component is falling by 10,000. That 10,000 is going into a bank. The bank is creating credit. So 10,000 deposit multiplier is 5. Total deposits is a 50,000. So bank creates credit of 50,000, right? So then, guys, when we say money supply here, guys, remember we're talking about M1, okay? And as a result, money supply is only 40,000. Guys, why did we use the deposit multiplier to get the total deposits? When you're talking about this, right? When you're talking about money supply and all, we don't talk about the deposits of one bank. No? We talk about the deposits of the banking system. Right? So when one customer went and put 10,000 into one bank, right? After the credit creation process, it has multiplied many amount of times. So the total demand deposits is 10,000 into 5. How do we get the 5 undivided by SRR? So there is 50,000 worth demand deposits. Currency held by public fell by 1,000. As a result, money supply increased by 40,000. Now, in our case, it is the opposite. The customer is not depositing. What is the customer is doing? The customer is withdrawing, right? Customer withdraws how much? He withdraws 10,000, yeah? He withdraws 10,000. So when he is withdrawing 10,000 also, it's the opposite of this that happens. That is what I'm trying to prove here, right? Hey, this is not the answer, okay? Now, the one I'm typing in red is the answer. So when a customer withdraws 10,000, guys, right? The deposits change by how much? He's taking 10,000. So it gets multiplied in the banking system, right? So deposits, right? Deposits change by, that is minus 10,000. He's taking away 10,000 multiplied by 5. Deposits fall by 50,000, right? Bank deposits in the banking system will fall by 50,000. I'm hoping you all know your credit creation. So then if you put it to the same equation, money supply equals currency held by public plus demand deposits, right? So in this case, what is happening? The currency held by public is increasing. He is withdrawing 10,000 means now he has 10,000 with him in cash, right? So the CC is increasing by 10,000 and the demand deposits is falling by a 50,000, right? So, and as a result, money supply is falling by 40,000. That's how it works when a customer withdraws. I'm hoping that's fine. Yes. Check? No. The basic question, guys, is not that hard. Okay. That's how that works. So then what is the answer? The answer has to be either money supply decrease by 40 or demand deposits fall by 50. One of this. Any of this is correct. So when a customer withdrew 10 or even currency held by public increased by 10,000, if that is there also, that's also correct. So which one do we have? We have answer number 4, right? Bank deposits. There will be, this will directly reduce bank deposits by 50,000. Bank deposits is what you call demand deposits. Answer says 2. Check the past paper book, guys. The answer says 2. Okay. Are they talking about a single bank? You withdraws 10,000 pounds deposited by most 20 followings. The bank has a other 20,000 reviews. Okay, we can. Okay, so then, okay. Hold on, engineer withdraws 10,000 from his deposit account if on and okay, so okay, sorry, okay, you can go with this, assuming that it's a single bank. They're asking about a single bank, right? So if it is a banking system, then what I explained, right? So if it's a single bank, then it's just this. Currency held by public increases by 10,000, bank deposit reduced by 10,000. So if it's a banking system, I think the question is not very clear about whether it's a single bank or a banking system, right? I'll also recheck with my other things as well, but I think, yeah, past paper should be correct. I will not argue with the past paper, so we'll go with that. Okay. Okay, let me clear my answer. Did I confuse you all? Shall I do this again? Okay, I'm repeating what I said now. Okay, my explanation is not wrong. It's correct if it was a banking system. I think I read the question wrong, right? So if it was a banking system question, right, this is how it will work. A customer putting money, a customer taking money. Okay, banking system. I thought this was a banking system question, but apparently it's not, right? And the question is not that clear also whether it's a banking system or a single bank. Okay, if it's a banking system, what I explained is perfectly correct, right? But for this question, again, they're not very sure about if it's a banking system or not. They're saying we reduced bank deposits by 10,000. Okay, so we'll make an assumption, additional assumption, that this question is talking about a single bank. So with a single bank, if a customer withdraws 10,000, then obviously bank deposits will fall by 10,000. Okay, so I'll remove this answer. So we'll go with answer number 2. Okay, set. As long as you've got the point, I'm fine. Right? Exactly. How is it a single bank or a banking system? That's a thing that confused me also here. Okay, a few things that I can talk about here is, for this, the bank has SRR of 20. Okay, so maybe this question is giving a small hint on withdraws 10,000 and the bank has a SRR 20%. Since they're not talking about a banking system, maybe that's why. But again, it's a very confusing question, right? Because you can't directly say whether it's a banking system or a single bank. But even I thought it was a banking system question, but they're apparently talking about a single bank. So then it's the second one. It comes with a little bit of practice, guys. But here and there, you will have a question which sometimes is a bit not clear. Okay, shape the no. They're confused. I also feel bad that I confused you all. Yes? No? Got it? Okay, fine. Okay, then going into question 31. Okay, so 31. The Sri Lankan commercial banks maintain their statutory reserves in the form of what? Cash in hand and deposits at the central bank, cash in hand and treasury bills, gold and foreign currency in their bank vaults, deposited at the commercial banks, deposit and foreign currency at the central bank. 1, 2, 3, 4, 5. How do they maintain their SRR? Okay, so SRR is the money that they should actually keep, right? Okay. Not treasury bills, that is anyway wrong. Gold, not gold. Deposited other, no. Okay, is it 1 or 5? Cash in hand and deposits at the central bank, or deposits and foreign currency at the central bank? I think it's answer 1. Can you someone recheck with the answer also? I think it should be 1. They don't convert into foreign currency as far as I know. Yeah. Okay. So it has to be answer number 1 then. Okay. So what is SRR, guys? The money that they should actually keep with them, right? That they can't give out as loans. So some of them, they might keep it with them itself. Some of them, they might deposit in the central bank, right? Guys, non-monetary gold means the gold that is held as reserves. I think you will study that in unit number 10, monetary gold, non-monetary gold. And whoever taught you balance of payment would have taught you all that. Right? So we go with answer number 1. Okay, 31. Okay, last question for the day. Okay, sorry, I took 3 minutes extra. Okay, if the central bank purchases treasury bills, okay, easy one. Yeah, guys, now I taught you all this before. Central bank is purchasing. What happens to reserves? What happens to money supply? So if the central bank purchases, they're giving these people money, right? Commercial banks are getting money. So bank reserves, what happens? Bank reserves increase, right? When the central bank purchases, bank reserves increase. What happens to money supply? Then they can give out more loans. Money supply also increases. So simple questions there. So 32, answer number 2. Hoping that's fine. Okay. So that's about it. I think we've done a lot today, right? We did 1, 2, 3, 4, 5. Okay. 6. So we've done from 2011 to 2016. I think we've done, okay, 6 years. So we'll start with 2017, the next class. Try to join a bit early. I'm not sure if I can get the 100 account or not, right? So try to join a bit early. And I'll give you all a proper exact date as to when exactly I will, is it from a commercial bank? I'm very sure the question is, okay, give me a second, guys. I'll answer your questions. I'll just let you know the things and I'll then wrap things up so the others can leave. Few things, okay, I'm repeating once again. If anyone joined, okay, 34 questions, okay, that's good. So if anyone joined in the middle, okay, only for this month, the class times will change. The reason is my fast track class, I have given them a break So I don't have fast track classes this month. So Tuesday nights and Saturday nights, I have my fast track class. That time I am free. Tuesday 7 to 10, Saturday 7 to 10, that's today's time. I am free. So I will use some of that. I am not saying every Tuesday and Saturday we'll have class at night. Some of those days I will use it to do beyond the classroom. But from September onwards, again, my fast track will start where we will be doing mock exams. Most of y'all are also a part of that now, right? So then it will go back to our Saturday morning, but only for this month, there will be a few additional dates. What are the exact dates after this class? I will think of, given my exam schedule also, I will plan it out and I will let you know maybe by today or by tomorrow on the group. That is number one. Recordings, I'm not very sure what exact the process. I'm not going to put it anywhere. Maybe today's recording only, I'll put it into a Google Drive link and send it maybe on the group, right? So since a lot of people missed it, right? Apart from that, others will come on YouTube. I don't know when exactly it will come. Someday it would come. Yeah, that's basically it. There is a model paper book which you all can pre-order, get by the 15th of pre-order by 15th, get by the end of the month, not end of the month. Ideally by the start of September, you all will get it. There is something like that. Fast track will be there next month, which you all can join for the paper class. That's basically it about the announcements. So thank you for coming. I'll see you all next class. Anyone who has questions, you all can put your questions back on the chat box because it got missed. Okay. Welcome, guys. See you. Have a good day.